Lots of Canadians see housing and real estate as perhaps the country's most valuable and reliable investment. Our guest says there's one unexpected asset class, perhaps, that he says has not only beaten stocks this century, but even the real estate market with our inflated prices for that category. We're joined by Hanif Bayat, founder and CEO of WOWA, a Canadian personal finance platform. I hope I got that. Is it WOWA or WOWA?
WOWA.
WOWA, I'm so sorry.
Yeah. No,
okay.
It's fine. So,
let's put up your first chart here,
sure.
Because it shows asset inflation in Canada.
Exactly.
It's a little hard to read the green lettering there, but the CPI this century up around 70%.
Yes.
The home price index with no rental income up fourfold, but gold up something like 10 times this century.
So, do you know we could look at different periods, but we look at 10 years and 25 years to see like what happened to the different asset classes. And one aspect that actually came out of our study is that the growth of all of them was between like 6% to 10% compounding rate, mainly because of the money supply has been increased 7% annually.
Okay.
So when we look at when we talk about inflation, always we talk about headline inflation, which is like CPI, means consumer basket product. That one, the geometric average in the last 25 years was like 2.2%. That's like tracking what is increasing in the basket of like consumer product. But the money in the society, like for example, M2 is actually increasing much faster. Actually, it's the compounding rate of 7%. So this money should go somewhere, and that money that goes different asset classes, we see that like all of them actually going between like 6% to 10%, not like 2%, like they are not following like headline inflation. Mm-hmm. But between them, the interesting point was that the gold actually performed better than others. So when we calculated like annual return of the gold, is actually the compounding rate was 10.3% annually. Even
though gold doesn't pay a dividend?
Exactly. And in our calculation, we actually consider the dividends is being paid by both Canadian stocks and US stocks. Mm-hmm. So what you see here as a return of Canadian stocks is TSX NTR is actually net total return of the dividends. And when we look at like S&P 500, is actually we study TR, means is a total return. Mm-hmm. Even that for example, for S&P 500, we consider all of the return being reinvested, still gold, which doesn't have any dividend, beat them in the last 25 years. But if you look at like 10 years, means we passed the 2007 and 8 financial crisis, we see that S&P 500 in the US is outperformed gold in the last 10 years.
Yes, in the last 10 years. But yeah, because gold began the century at roughly $290. And right now it's gone up north of 3,300.
Exactly.
Yeah. That's amazing, the run-up. So gold was less than $300 at the start of this century.
Exactly. Actually, 1 kilogram of gold is 150,000 Canadian. If we I want to just provide some numbers to audience. The reason that the gold is performing well is because of the limited supply. Means that the amount of the gold is increasing 1 or 2% maximum per year. The amount of the gold we have now all over the world is like 200 million kilograms. And each of them, as I said, is 150,000 Canadian dollars. So if you do the math, it will be like $30 trillion, the total value of the gold. Yeah. So the point is that we cannot generate gold, and that's the reason that it keeps its value. You know what I mean? But again, I should emphasize that if you go to the different period, for example, if you go to last 50 years, the performance of the gold would be different because the central banks was selling their stocks actually 40, 50 years ago. So the performance, if you go like to 40 years, actually the annual return would be like 6-7%.
And let me just ask you one last question on the return from houses. And I know you're a tremendous number man with very little time, but are you exaggerating the return from real estate because you've got all the costs of repairing the roof and stuff?
Actually, we studied real estate in 3 scenarios. One is that like the home price itself, one is that this net rental income of 2% of home value, and one is that 4%, like means like after paying all of the costs, still you can earn 4% of the value of home as a rental. It's still that case, which means that very good rental property the return is 8.6%, is far from gold. So like people, but the point about real estate is that people can do leverage. Means you can put 20% down and borrow the rest. So that gives the highest return if you calculate it based on the amount that you put as a down payment. But if someone buy everything by cash, means 100% of the property by cash, like gold, then the gold return has been better.
Thanks very much, Hanif.
Thank you for having me.
Hanif Bayat is the founder and CEO of WOWA, the finance platform, Canadian personal finance platform.